Well, hi everyone, Sean Humphreys here. Welcome to All Things Retirement. In this installment, we are going to cover some information that I think you'll find somewhat encouraging in the midst of all this market volatility and geopolitical events that are creating uncertainty all around the world. The information was released by one of Canada's largest asset managers, and like I said, I think you'll find it a little bit encouraging. Now, if you're new to our channel, make sure you hit the subscribe button so you're not missing any content we're posting on a regular basis in the area of retirement income planning and various aspects of wealth planning. And if you want to find out how you can get your own complimentary retirement plan, make sure you go to the show notes, click the link to our website so you can get more information on that complimentary service. Okay, let's take a look at this information released by the Royal Bank of Canada. So the Royal Bank of Canada, or RBC, releases data. Now, they're using data that took them up to June of 2022. So it's not right up to date, but it's going to show us a bit of a trend line. So if you look at the chart, revisiting our long-term return expectations, the return outlook for a long-term balanced investor, that's generally about 40% bonds, 60% stocks, has improved significantly since January. So we're going to take a look at the 10-year annualized expected return profile. So when you look at portfolios, generally speaking, when asset managers are looking at markets, you begin to see them downgrade return expectations as they see the economic numbers, even the valuations in the market getting a little bit stretched. So although no one knows for sure when we're going to hit downturns, because that's often a surprise, it's not until you look back then you realize maybe those were the factors that were going to drive the downturn. But when they do happen, often what happens is going into that period, you see a revision by asset managers to the performance expectations. So if I look at a conservative portfolio back in January of 2022, RBC was expecting a 10-year performance numbers of about 4%, and 10-year performance numbers of 5.7% were revised as of June. So I'll come back to why that is. If you look at a balanced portfolio, they had expectations have been downgraded. They're now looking at a long-term 10-year return of 4.9%. And the revision as of June had increased that expected return to 6.5% compound annualized over the next decade. If you look at an all-growth portfolio, the expectations at the beginning of the year were 5.5%. Again, valuations were stretched. The market was getting a little bit expensive, and they thought that it would be difficult for them to hold the performance numbers they'd had in the past. And then with the devaluation of the market through beginning of February, they upgraded their performance expectations to 7.1% on a compound annualized basis. So what's happening here? Well, what happens is our performance expectations by asset managers particularly will get impacted by the new reality of economics. So when you see the markets getting more and more expensive, you'll see asset managers begin to downgrade their expectations. When market get cheaper, and that's what we've experienced obviously the last few months, we've seen a sell-off in the market. We're in a bear market territory, and valuations now are lower than they were in January. So the expectation is we'll see recovery, and then as we go into that recovery period, we'll see actually better long-term performance as a probability on these portfolios. Now, this is one of the reasons why you recommend in previous videos we said it's not productive to try to time these decisions. You want to be in the market when you begin to see post-market correction recovery so you can ride that momentum. And this chart by RBC really confirms that. Their expectations have changed in June compared to January of this year, and of course their expectations in their next release will probably be even more impacted if we see a downgrading in the markets, which actually we've seen since the June dates. Anyway, I hope that's helpful for you. A little glimmer of hope in the midst of lots of volatility. And again, if you're new to our channel, hit subscribe so you don't miss future content. And if you want to find out how you can get your own complimentary retirement game plan, go to the show notes, click the link to our website to get more information on how you can get that. Anyway, you take care. Bye-bye.